What if the biggest threat to the economy isn't inflation? It isn't recession, and it isn't even the Federal Reserve. What if it's geopolitics? Tonight on American Trade, we break down the global forces reshaping markets in real time, from the Fed and inflation to oil shock, AI stocks, tariffs, and the rising tensions in the Middle East. Because right now, the world is repricing risk. The Federal Reserve entered 2026 expecting rate cuts. Instead, the world changed. Oil volatility, renewed tariff fears, and escalating geopolitical tensions have complicated the inflation picture dramatically. Multiple analysis now believe that the Fed may hold rates higher for longer as energy costs and global instability pressures price upward. The economy itself remains surprisingly resilient. Business investments, especially in AI infrastructure and intellectual property, has remained strong, while consumer spending continues to hold up better than many expected. But here's the problem. The Fed is fighting inflation at the same time markets are addicted to liquidity, and that creates a dangerous setup. If rates stay elevated, borrowing slows, commercial real estate weakens, regional banks remain pressured, and consumers begin to feel the squeeze. But if the Fed cuts too early, inflation could re-accelerate immediately, especially if oil spikes again. That's why investors are watching every Fed statement like it's a military intelligence briefing. The biggest macro story in the world right now may not be earnings, it's the Middle East. Markets have been swinging wildly based on developments surrounding Iran, the Straits of Hormuz, and the U.S. military involvement. Roughly a fifth of global oil flows through that region, meaning any disruption immediately impacts inflation, transportation, and global growth expectations. Oil prices recently surged near or above $100 per barrel, before retreating on hopes of a possible diplomatic breakthrough between the United States and Iran. But investors know something important. Even if a ceasefire happens tomorrow, the economic damage doesn't disappear overnight. Supply chains remain fragile, shipping insurance costs rise, energy markets remain unstable. And global food and fertilizer prices are beginning to feel the impact as well. This is why gold has remained incredibly strong. Investors are hedging against inflation, geopolitical instability, debt concerns, and weakening confidence in a fiat system. AI is holding up the market. Now here's where things get fascinating. Even while geopolitics shakes the global economy, AI stocks continue pushing markets higher. Semiconductor companies and AI infrastructure firms have become the engine of Wall Street. Analysts point to massive investments in data centers, chips, automation, and artificial intelligence as one of the strongest growth stories in the world economy today. And this creates a split market. On one side, industrial pressures, inflation fears, weakened consumers, and geopolitical instability. On the other, AI euphoria, massive capital spending, and institutional optimism around productive gains. Some analysts are even warning about a potential AI bubble forming after years of concentrated gains in mega-cap technology stocks. But others believe AI could drive the next decade of economic expansion. So the question becomes, is AI the solution to slowing growth or the next speculative bubble? There's another trend quietly developing behind the scenes. Some analysts are calling it the Sell America trade. That means global investors reducing exposure to U.S. equities, U.S. bonds, and even the U.S. dollar itself. Why? Because of tariff uncertainty, political volatility, debt concerns, and the fears that America is entering a more fragmented global era. Now let's be clear, the United States remains the dominant financial power on Earth. But cracks matter, and global capital always watches confidence. This is one reason why gold has surged, Bitcoin remains strong, and alternative assets are attracting increasing attention. Investors are diversifying against uncertainty. So where do we go from here? Here's what markets are watching over the next few months: the Federal Reserve's policy decisions, inflation data, oil prices, AI earnings, consumer spending, tariff policies, and geopolitical escalation risks. If oil stabilizes and inflation cools, markets could continue rallying. If geopolitical tensions worsen, the entire inflation narrative changes overnight. And if the AI trade weakens simultaneously, markets could become extremely volatile. There is no longer a simple bull market or bear market. This is a geopolitical market. The world economy is entering a new era, an era where geopolitics moves markets, AI reshapes industries, central banks fight inflation, and investors search for safety and opportunity at the same time. The next decade may create enormous wealth, but also enormous volatility. And the people who understand macro trends early may have the biggest advantage of all. If you enjoyed this breakdown, subscribe to American Trade for more content on markets, geopolitics, precious metals, crypto, investing, and the future of the global economy. And remember, in uncertain times, information becomes an asset.